Well, hello friends, welcome to Easyequities. My name is William. I am so excited to be able to have you today so we can be able to talk about one of the most important things, investing. Um, I'm having another calm moment, right? And I was just sitting here and just thinking about the whole concept of investing. And I'm realizing that for so many people, it is hard to trust investors. It's hard to trust brokers. It's hard to trust financial advisors, especially in the time whereby jobs are less, especially in the times whereby there is a lot of criminality. People are being is this the word fraudulent? So it's very hard to trust people when it comes to investing. And when I was sitting here, I was just thinking to myself, how can a person who has no knowledge move from a place where they are so uncertain to a place where they are investing by themselves and for themselves, and from there to making millions, right? So firstly, I just wanted to talk about that in stages, like in that stage, how can a person who is uncertain move from there to a place where they're investing for themselves, and from there to a place where they're making millions. And like I always say, I am not there. I have my own struggles. I'm not there yet, but I want to get there. I want to get there. But here's the thing: if you are that person, and there's so many people, if you are that person, stay tuned. And if you are a person in between the ages of 18 to 30, also a person from 45 to 60, stay tuned still. Because this video accommodates you. Because the idea that I want to throw in might shake a bit the people who are between 31 to 44, because those people have a lot of responsibilities. They have debt they're taking care of, they have bonds, they have children, but for those that are single, perhaps they should stay. Here's the thing. I want to encourage you, those who are uncertain. I want to encourage you to, step out of your comfort zone. In order for you to be able to reach your goals, in order for you to be able to attain the things that you want to attain, in order for you to become what you want to become, you have to step out of your comfort zone. And when you are in a comfort zone, you are southern comfort. When you are comfortable, and you are refusing yourself a first step towards your financial freedom, you are refusing yourself, that it's going to be difficult for you to get to a stage where you are watching tutorials. If you are watching this video, that means that you are putting your finger in and you are saying that I want to learn, So I want to encourage you not only to learn, but then to register in apps like IQ Options. I'll put a link there. Apps like Easyequities. Apps, actually, let's stop there. Apps like IQ Options, apps like Easyequities, and let's add Frank, right? When you are watching, if you are watching this video, you're saying to yourself, I want to be able to understand. Not only understand, but let me practice a bit. I want to encourage you to watch my tutorials. You'll see that there's season 1 where I speak a lot about Easyequities tutorials, season 2 where I try and incorporate different apps and brokers, especially for self-guide, and go watch a few of them, and also get your Easyequities portfolio going, But instead of, okay, let's start here. Instead of putting money in your Easyequities, they have a practice account where you can just click there and practice with their money and see if the money doesn't exist. It's just a practice account, and see if you would be able to know how to use it. And go through my season 1 Easyequities, where I speak about, that's a playlist where I speak about Easyequities, and I have full tutorials, 20, 30, 40 minutes, and I show you step by step how to invest and what is Easyequities and so forth. And also go to my video in season 2 where I speak about Frank. I show you what Frank is, I show you how it works, and I tell you step by step what it is. And also go to season 2 where I speak about IQ options, and watch my video. And as you watch my video, make sure that on the side you are practicing. You are practicing how to forex trade, practice how to stock trade, practice how to buy shares, sell shares, and so forth. And that will inspire you to be able to say, hey, I want to be able to continue on investing. I want to be able to put in my real money, so that I can be able to maybe I found my niche, maybe I know what I want to invest in, and so forth. And if that's where we move to the second step, where you start investing with your real money. I have a lot of shorts, I have a lot of videos that speak about how to do certain things in Easyequities, IQ options, and Frank. And it helps you to be able to, invest, research, stay on the news. It helps you to be able to have these informations so that you are not afraid when you invest. And another thing that I always say, we are on step 2, right? Another thing that I always say is that don't use your principal. Don't use your principal. Your principal is the money that you put in. So if you were to buy a house today, if I were to take 1.2 million rands and buy a house, when I buy that house, I buy it and the money is gone, right? And in my mind, I know that this house is worth 1.2 million. Unless someone comes and puts a shack or a tavern or something that will devalue my house next to my house or alongside my community. But as far as I know, my house is worth 1.2 million. And after 10 years, the value of the house has increased. The people around my community, they love their community. They've been taking care of their community. They don't want shacks. They don't want anything. There's a school there. There's a new mall there. There is something that is coming, and so forth. If you are in that situation in 10 years, then you know that probably your house now is running towards 2 million. So your principal in the beginning when you were investing is 1.2 million. So it's gone. You can't spend it. And now the value of your house has increased in 10 years. It's 2 million. And now when you sell your house, you sell it probably 1.9 to 2.2 million. And you get your money, you made a bit of profit, and you buy another house. And when you buy another house, you look for the kind of community that you found in the beginning, so that it will grow. That community when it grows, the value of your house will grow. There are people that live like that. There are people that live like that. Actually, there are other people that have a house, that live in their house, and they buy other houses, and they do that. They flip them. So that is their business. That is their niche. That is one thing that they know the most, right? So buying shares and investing in companies is the same thing. When I say don't touch your principal, that's what I mean. When you buy shares that are worth 10 rands, when you buy shares that are worth 10 rands, that 10 rand is your principal. So you make sure that that money is gone from your mind. It doesn't exist anymore. You bought something, it's not there. So now you have invested 10 rands and that money has disappeared, right? That's how investing works. In 10 years' time, if the company that you invested in has grown, maybe it has moved from 10 rand to the value of your share is no longer 10 rand, it's 20 rand. So now you have made you have made a profit. So that means that you can take out your money if you want to. And if the company has changed, now it's giving out dividends, that means you have a certain amount of dividends that you're getting, whether in every month or 3 months or 6 months or 12 months, it doesn't matter. So that's how investing works. So don't touch your principal. Don't sell your shares. When I buy shares today worth 10 rand and now the company has went down and now the value of my share is 1 rand. Don't be afraid and take out that 1 rand. If you were to do that, then you have lost like 90% of your investment. So you wait until the company grows. That's why I always talk about long-term investment. Long-term investment. You look at the company, how it is performing, how it is growing, and you invest and you stay. Perhaps in 2 years, the company will go very low. If you want to keep on investing, you can keep on investing. And perhaps from there, maybe 7 years down the line or 8 years down the line, the company has grown 200%. You have made a profit. You have made a profit. Or the company has grown to a point that they are able now to give out dividends. You have made, or you are making profit. That's how investing works. So now, how do you move from there to making millions? Now, that's the purpose of today's video. The purpose of today's video is to make you realize that when you go to financial advisors, when you go to brokers, when you invest money with them, what they do is this. They would invest firstly in big companies that are already there. They're not going to invest on startups, a company that just got listed 2 weeks ago or something. No, they are going to invest in companies that have been there. So we're talking about companies that fall under maybe top 40, top 100, top 200. So, or top 500. It doesn't matter. Maybe, let's say top 40. They invest in companies that are within that barrier line of top 40. So they take your money. Say you are investing 5,000 Rand a month with them. So they take that money and they throw it in those companies. They invest in those companies. They would invest in stock. Maybe they would buy shares from Exaro, and also find an ETF that has top 40, and maybe Exaro falls under the top 40. They would also put in a percentage of the money that you're investing with them in that ETF. That would also go to another portfolio, another bundle basket. It doesn't matter. And they try to diversify your portfolio. At the end of the day, you have invested in Exaro. So that's how you can invest to make millions. That's the third step. That's how you can invest to make millions. When you are starting, you invest in anything big. You invest in your big companies, and sometimes those big companies, they take too long for them to break through even further, because already their shares, they're about at 1.2 thousand, 2,000 Rand. That's where you make your research and go for other companies. But then if you can afford them, but then what I'm trying to say to you is that if you want to invest to make millions, that's what you look for, a safe route first. You look for a safe route first. Internationally, you invest in Adidas, Coke, you invest in Apple, you invest in Microsoft, because those are safe routes. Nike, safe routes. They've been there and they are going to be there for the next 10 years. In South Africa, you're looking at Standard Bank, you're looking at Absa, you're looking at these big companies which are safe, so that you can be able to make profit. And after that, after you have invested, let's say for 5 years, you invest like that. You invest in the top 40 companies, right? And you are investing 5,000 Rand every month, 5,000 Rand every month. Then now you have 3,000 Rand after 5 years, right? So now, since you have 300,000 Rand invested in all these companies, then now you can say, okay, for the next 5 years, I'm going to invest 5,000 Rand into other companies. So now you look for companies that fall from number 41 to number 60, 70, 80, or even 90, 100. And those companies as well, you'd find that their shares are about 100 Rand towards 1,000 Rand. It doesn't matter. You invest and you give your all. You diversify your portfolio. You invest in stock, you invest in ETFs, you invest in bundles, baskets, you invest in portfolios so that you can be able to diversify your portfolio. And that's what we mean, that you are investing towards making millions, towards making millions. And if you have more than 5,000 Rand that you can invest, you can look at other brokers as well. You can look at talking to financial advisors. With this one that I'm talking about today, you are doing it yourself. With your other money, you can say, okay, I can afford to invest 10,000. Let me invest 5,000 by myself, and another 5,000 let me go to brokers so that they can be able to invest that money for me. So that's how it works for me. That's how it works. And I want to encourage you to think about it and do the same thing. Because if you want to make millions, if you want to move from 5,000 to 300,000, or from 10,000 to 600,000, from whatever amount of money that you want to invest towards the goal that you want to reach, you need to be able to have a safe boat first. Invest in companies that are big. Then after that, you come to companies that fall under the top 100. Then you go to companies that fall under, a certain number. And also you look at ETFs, you look at companies that are paying off dividends, you look at bundles, portfolios, and so forth. You diversify your portfolio. You invest in property, you invest in banks, you invest in different kinds of things so that you can be able to make profit. And you look at what that country is specializing in. If, for instance, your country makes more money in beverage, in retail, in petroleum, you invest in those things so that you can be able to make more profit like that. And you look at other countries. You look at New York Stock Exchange. You look at how you can invest and what you can invest in the UK. You look at all these countries and be able to diversify your portfolio. Guys, that's how it works. That's how it works. That's how it works. Move from your comfort zone, study and educate yourself. Go to my videos, tutorials where I show you how to invest and invest real money. And after you are being comfortable, of course, and after that you move to taking risks in terms of investing in top 40 companies, top 100 companies, ETFs, bundles, baskets, portfolios, and so forth, and grow your portfolio. And remember, take it step by step. Step by step. This year I'm going to be investing in Xero. Next year I'm going to be investing in Redefine. That other year I'm investing in what. And in 5 years we invested in 5 companies, right? And you have given your all. I'm talking about people that have less money, but like 5,000 Rand. But for those who have like 10,000, 100,000 they want to invest, then a year you'd say, okay, I want to invest in 10 companies, and these are the 10 companies. Next year the other 10 companies. Next year the other 10 companies, and so forth and so forth. And every time when you invest, you try to match up. You say, okay, I've invested in these 10 companies. I want to invest in a certain number of ETFs this year as well, and so forth next year, until you have 5 years and you have made a certain number that you wanted to reach. So guys, that's it from me. Hit that subscribe button, notification button, comment down below, and let's talk about investing and let's grow together. Let's see how we can make money together. Let's educate each other, and let's build a healthy community whereby we are encouraging and motivating each other. Thank you so much. Enjoy your day.